Hi, this is Kerry Artak with Wicked Stocks, that is, bringing you your daily NVIDIA report for Monday, April 21st, 2025. Let's take a look at the charts. This is a weekly bar chart. We're below the 111.09. Actually, I showed on the weekly chart. The daily chart is 110.57 channel bottom, anticipating 80.19 as an objective over the next 3 to 5 weeks. That's a bit of a guess. Now, we did close the previous week back above this formation, but as you recall, I was only anticipating the possibility of 127.50 that I actually see as our key upward pivot point into later year. In other words, if we can close above the 127.50 speed line on the weekly chart in the coming weeks, then we've got a good low, at least for the quarter, if not through the rest of the year. But until then, the anticipation was, having settled back above the 111.09 channel bottom a couple of weeks ago, that it would allow a reprieve, if you will, and a recovery, modest recovery into the upper 120s. Wasn't to be, and in fact, on the daily chart, you can see how, that formation held for a couple of days, and then we gapped clearly below it last week. That would have been Wednesday of last week. I'm actually dizzy now with everything that's being said in terms of what was the yes, that was the projected the $5.5 billion markdown, if you will, with the licensing with China, et cetera, on semiconductors. So here we are on the defensive. Clearly, this does not look bullish at all. Gapped below, back below the channel structure. 110.57 remains our ceiling for the week, and you might even say through May, because below which, re-anticipating, if you will, 80.19. Now, we were expecting this as a longer-term objective anyway, but what we were allowing for was, in the interim, retracement up into the upper 120s before then presumably falling back again. And that really is the dynamic. I don't have them on both charts. I suppose I should, but it really is a 127.50 ceiling to an 80.19 floor of long-term support, with 111.09 or 110.57, I should say, on the daily chart, a pivot point inside that. We've fallen back and away below 111.09, and we are on the defensive really into May activity. There is a descending channel bottom that is very roughly held selling pressures the last couple of days at 101.39. That is our next downward pivot point. If we happen to break or open today below 101.39, I would expect 97.50. 97.50 is just a soft intraday level. It is a downside 5/8 Fibonacci from the move low about 2 weeks ago against the pullback high several days later. I do expect some degree of hesitation here on an intraday basis. And if we break 97.50 today, we could test 90.69 by the closing bell. That would be quite a sell-off day. 90.69 is the August 24 low. We spiked through it on the low day. It is still there to contain daily selling pressures. I don't see it today. What I do see, if we are to test 90.69 this week, would be a settlement today below 101.39. And then I think you have a secondary sell signal. So 3 to 5 day swing traders, you can still play 101.39. Holding above 101.39, in other words, continued daily settlements above the structure will keep 110.57 in play over the next 3 to 5 days. And once again, if we close below 101.39, I would expect 90.69 within 3 to 5 days. On an intraday basis, we've got 97.50. It just might contain daily selling pressures, 97.50, but it is a settlement today below 101.39 that I think structurally sets up our objective in the low 80s over the next 2 to 3 weeks. That 80.19 long-term channel bottom, able to contain selling through the rest of the second quarter and quite possibly through the year. So this is a long-term support area, 2-year channel support that may well contain annual lows, and I see it as a 3 to 5 week objective below the 110.57, 111.09 area, and I'm going to say a 1 to 2 week target if we close today below 101.39. Working our way upside today, I do have 107.58 as a 50% upside retracement over the last week and a half, 2 weeks. So if we trade up, if we don't retest 101.39, 101.39 is once again this descending channel bottom. So if we trade up from here, we do have 107.58. And I like 107.58 as a Fibonacci because it sort of cuts through right in the middle of this gap that still exists between what is this Tuesday and Wednesday of last week. And I think this can give the market trouble, maybe even for the day itself. So once again, if you're talking an upside, a day trade opportunity, it is, if we open above it, buying 101.39 and holding out for the 107.58 level. That can contain intraday buying pressures, possibly the balance of the day. If we close above 107.58 or push through 107.58, 110.57 is in play on an intraday basis where we can top out for the week and fall away again. If once again, I'm talking to 3 to 5 day swing traders, this is a good image right here. Buying 101.39, holding out for 110.57. But if you're just day trading the market, I think buying 101.39, holding out for 107.58. If you want to play the short side as a day trader, you're selling an open or a break below 101.39, playing the short side down to 97.50. 3 to 5 day swing traders, though, can set a short based on the settlement below 101.39, expecting 90.69 within the week. And yes, we are in a 3 to 5 week sell signal anyway by having closed last week below the 111.09 formation, which will keep the low 80s in reach over the next 3 to 5 weeks or sooner, as I've already described. Now, upside, there's just a lot going on. We still have 115.10 as the high of the low on the weekly chart. We've got 117.65 as a descending 3-month channel top. Even if we close back above 110.57, as I mentioned the first time, there are these challenges. But if we do close above 110.57, and I'm probably talking on the weekly chart here again at 111.09, you should allow for recovery. And I use the word allow very deliberately because I don't expect 127.50. I just don't want to see you hold a short position. If we close above 111.09 all the way up to 127.50. But 127.50 or 127.64 on the daily chart, it also lines up nicely with the 5/8 Fibonacci, is a prime area to sell through the rest of May and into June. And from here, we can fall to new lows, believe it or not, within a month or two of testing 127.64. So, you know what to do if we close back above 110.57 today, which I don't think is going to happen. I think 3 to 5 day swing traders can play the long side to 117.65. This could be within a day or two. If you're looking to go long into May activity, I think I'm looking at it right now, I think it's a settlement above 117.65. That is the safer bet. That is a violation of a descending 3-month channel top. So, selling 110.57, I don't want to lure you into then selling 117.65 and then selling 127.64. And before you know it, 2 or 3 weeks into it, you are heavily short. So, but you're probably an experienced trader and you've got your own trade execution risk management methods, and I'm providing the points. There's more than one way to trade the market, more than one way to go long or play the short side. I guess what I'm going to leave you with is if we close today above 110.57, I don't see a compelling reason to stay short, at least into later week. I think you'll be given the opportunity to play the short side again at 117.65. Now, absolute last thing I'm going to say, and we're not going to see this anytime soon, but if over the coming weeks we can close above 127.50, then I think we've got a good low for the year. And we should, within several months, push onward and upward to new highs into the upper 160s. So, I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. We offer daily triple Q, daily SPY analysis, weekly analysis in Apple. And we also put out 2 stock picks every week that you should check out. The last 2 weeks are still relevant, and you can see them for free by going to wickedstocks.com and taking advantage of that 5-day free trial. That is all I have for Monday's NVIDIA. I'll be back tomorrow, of course, with Tuesdays. You have a great day.